Good morning, and welcome to the inaugural episode of Macro Now, set to be released every Monday morning. My name is Alexander Turro, Senior Market Strategist here at RJO Futures. We're going to be contextualizing the rates of change of growth and inflation, not only here domestically, but globally as well. So with that said, let's start with the global currency market. We have the US dollar now up 0.7% in the last week and up for the second straight week, making a quasi-deflationary type of move since we saw the dollar make a phase transition from bullish to bearish trend back in June. It's still down minus 3.5% in the last 3 months. The euro is up 0.1% last week to plus 4.8% in the last 3 months and remains bullish trend. The yen is up 0.1% versus the dollar in the last week and remains bullish trend as well. The British pound, however, was taken for a 3.6% loss last week and is the first FX mover to move to neutral trend. In terms of dollars, what you saw last week is the oil market coming off nearly 6% last week as oil volatility was teetering that bull bear line. OVX is the ticker on that. That brought down the CREB index, the commodity index blend of 19 commodities, down 2.2% last week, but it's still up 10.6% in the last 3 months. It remains bullish trend. That coincides with some of our other markets this morning. Metals, gold, silver, platinum, agriculture, and corn, soybeans, and wheat, all inflating higher this morning, as well as if you look at something in the softs, something like cotton, which is nearly up over 1% on the day as well. Moving on, what we're going to take a look at is breakouts in volatility. Something that we observed just a little over a week and a half ago was the series of lower highs made by the VIX, the volatility index, as the market was hitting all-time highs, which creates a bubble. As you know, bubbles implode when the price of the asset is increasing to all-time highs as the volatility components continues to increase. And so we just encouraged to reduce our long exposure and reallocate it into assets of falling volatility. So you're looking at something like gold, which continued to fall to 20 last week. That appreciated another 0.3% last week and is up 12.3% in the last 3 months and remains bullish trend. Silver, another one that appreciated 0.5% last week to 47.1% in the last 3 months, remains bullish trend. And you have platinum, up 4.6% last week to 13.1% in the last 3 months. In terms of other asset allocations with falling volatility, you want to take a look at treasuries. Just in the overnight, you had the US dollar come off, which has a strong inverse correlation to the SPX of just about 0.72 on a 15-day, which is in part why you have the SPYs up this morning, coupled with the fact that you had some buying coming in between 2 and 3 in the morning. And it's interesting to note you have the treasury market largely unchanged despite that, with the MOVE index, the volatility component of the treasury market, continuing to fall over, which is a bullish signal for treasuries. So with that said, we're going to continue to monitor the move in the US dollar, as well as staying long gold and other precious metals, as well as treasuries. If you have any specific questions or want to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening, and keep your head out there. Thank you.